Hello and welcome. According to the trading chart, market volatility remains high. Yesterday, in the first half of the day, both the euro and the pound sterling were trading under pressure. However, after the US reported that its economy had contracted by 0.9% for the second straight quarter from April to June, thus confirming a recession in the country, the European and British currencies pared early losses. US statistics point to mounting economic headwinds caused by aggressive interest rate hikes. All these will keep weighing on the economy, which means that the US dollar may lose value against the euro and the pound sterling. Nevertheless, there requires upbeat macroeconomic indicators from the euro area and the UK, which are unlikely. Therefore, the market is expected to remain range-bound. Although the euro managed to post gain amid gloomy US economic readings, it ran into the resistance level of 1.0230 and cannot yet break above this mark. Today's macroeconomic calendar is full of important releases from the euro area and its member states. Germany is set to publish data on GDP. The country's economy is forecast to expand by 0.1% compared to 0.2% in the first 3 months of 2022. This may put significant pressure on the European currency. The euro area will report statistics on inflation. The indicator is expected to be 8.6% in July 2022. A bigger than expected rise in consumer prices will indicate Europe's precarious situation. GDP growth in the euro area, which is projected at 3.4%, is also worthy of attention. If the region's economy grows less than predicted, the euro will hardly be able to rise above monthly highs. As for macroeconomic indicators from the United States, traders may take notice of the core PCE price index, personal spending, as well as the Chicago Purchasing Managers Index. However, these reports are unlikely to have a severe impact on market sentiment. Thus, the focus of investors will be on releases from the euro area. From a technical point of view, a false breakout at 1.0230 will create a sell signal. In this case, the euro-dollar pair will slide to 1.0186. If the price fixes below this level and tested from the bottom up, the euro will come under strong pressure and tumble to 1.0144 and 1.0099. At the level of 1.0099, I recommend going long on the rebound. Long positions at 1.0186 or 1.0144 can be considered only amid a false breakout. I think that today's bulls will make every effort to break above 1.0230. If data on Eurozone GDP growth turns out to be positive, the volume of long positions will increase. Thus, the European currency will have a chance of rebounding to 1.0273. At this mark, it will be possible to open short positions on the rebound with a view to catching an intraday correction of 25-30 pips. Speaking of the British pound, bulls are aimed at pushing the price to 1.2207. However, they will hardly be able to overcome this mark. A false breakout at 1.2207 will create a sell signal, thus dragging the pound sterling to 1.2160. If the price fixes below this level, the pound-dollar pair is expected to extend losses, falling to 1.2113 and 1.2071. At these marks, traders will be able to open long positions, counting on an intraday correction of 30-35 pips. If the price forms a false breakout at 1.2160 or consolidates above 1.2207, the way to 1.2247 and 1.2285 will open. At the level of 1.2285, I recommend going short on the rebound. Short positions at 1.2247 will be relevant only in the event of a false breakout. The point is that the pound-dollar pair continues to trade upwards and demand for risky assets persists, especially following the Federal Reserve's latest monetary policy meeting and downbeat data on the US economy. Thus, it will be a wise decision to avoid riskies by waiting for a false breakout. Good luck and have a nice weekend.